Hey guys, this is Crypto with James talking to you today about probably the biggest catalyst in the short term coming on Wednesday, which is the Fed meeting. So we've got to discuss that and the impact that could have. Before I do, as always, I update the spreadsheet. These are the first 26 coins I spoke about on the channel. Ontology, bloody ontology. Look at it. Ontology's gone red. Got to format that. If you'd invested $100 into each one of these when I released the videos and you're still holding all that crypto, you'd be in profit for $50,700. This is not what I hold anymore. You want to see what I hold? Come check out Copy My Crypto. It's where I share my portfolio, talking about the markets a lot at the moment. 2021 was a great year with huge gains in long-term investments. If you want to be a part of that, match those gains. Come check it out. One thing I have been banging on about for bloody ages is a bear cycle will come this year. Whether we're here now, whether we're going to be in a deeper one in a matter of days, whether we're going to be in all of a sudden a bull rally and then a deeper bear cycle in 6 months. There's one coming. And when it does, that's the best opportunity to invest. It's the best time. Everything's on discount and you can find top tier projects that are hugely undervalued. That's the opportunity. You should be praying for a bear cycle because that is where the investment money is made, where the retirement money is made. I've got a spreadsheet of cryptos that I'm watching for the next 6 months in particular that I think are huge investments that can have huge returns on investment from a bear cycle to a bull cycle. I'm going to be sharing those cryptos when I think they can 40, 50, 100x with the Copy My Crypto members. If you want to be a part of it, check it out. All right. Bitcoin continues to retrace. Okay, not getting away from it, guys. It's retracing. Obviously, Friday, I believe it was, Friday was a fairly brutal one. Saturday continued. We regained ground on Sunday, and then we lost that ground so far today. Although we'll see how it plays out. It went a lot lower, down to the low 33s earlier today. But the only thing that matters right now in the short term is this Fed meeting on Wednesday. It is massive. It is massive. Now, the Fed have been discussing for a while about interest rate hikes and an end to quantitative easing. So we've got to look at what that is and how that's going to impact things. Now, they're looking at the hike in March. Okay. So right now they're saying as we move through this year, if things develop as expected, we'll be normalizing policy, meaning we're going to end our asset purchases in March, meaning we'll be raising rates over the course of the year. At some point, perhaps later this year, we will start to allow the balance sheet to run off, and that's just the road to normalizing policy. Now, make no mistake about it, we're talking about a balance sheet of $9 trillion. So they do need to do something. But the discussions that they've been having have had an impact on the markets. We saw the S&P 500 drop last week about 6%. That's $2.5 trillion. We saw their discussions have a major impact on the market, on all markets. So right now, them bringing things forward would be exceptionally bearish. Exceptionally bearish. The plan in place right now is that they continue effectively buying treasuries and agency mortgage-backed securities and etc. through to mid-March. If they were to stop that, that would be bearish. If they are to say that their plan is still in place for mid-March, that's actually not too bad. That's fairly neutral because of what they've been saying previously. And as long as interest rates, they don't speed up the process of hiking in interest rates, that's fairly positive. If they actually effectively stick to what they've been saying. Now, we saw the Fed meet earlier in this year, and when they did, not earlier this year, earlier last year, and when they did, their meeting ended up being priced into the market prior to it happening, and we actually saw a bounce in the market. So if they come out saying something either neutral or positive, that could already be priced into the market. And actually, Wednesday could end up being a day that we see a positive bounce in the market. only in the short term. But we've got to, we can only guess what the Fed's going to do. You know, the Fed have spent many, many years saying one thing, doing another. So it might be that they end up not matching what they've been saying with regards to the interest rate hikes, with regards to the, ending the quantitative easing. Now, one thing they have to bear in mind as well is they've got to match economic risks against the market tightening. And right now in America, there's an Omicron drag still. What we are seeing is that it slowed down. It slowed down the economy growth in America. It slowed down the hiring of staff in America. Economists now predict that the US economy is going to end up having lost jobs in both January and February. That would end up leaving the Fed with the tough choice of raising interest rates in March in the face of declining employment. That's a big problem. You can't just start raising interest rates while people are losing their jobs. And this is the point. Even a temporary Omicron-related dip keeps alive concerns that the Fed this year will face not the best but the worst of both worlds in the form of a slowing economy, an inflation that does need tough medicine, because you do have to resolve the inflation that you caused, guys, that you caused, because that's the situation. So right now, this lag in terms of the growth of the economy, this lag in terms of the growth of employment, factors into decision making. And we can't, again, unless you're an insider, we can't know what the Fed are going to say. But neutral or positive is a positive response for the market. Negative, and that means rate hikes sooner or tapering off quicker, would be exceptionally bearish for the market. But neutral, in all likelihood, we see a market bounce. We see the markets across the world appreciate in value a little bit because the meeting that is going to occur in 2 days has already been priced in. And if you think about it, when we saw the S&P drop last week, we saw FTSE, we've seen every market globally price it in. We actually saw gold price it in. You look at gold last week, gold priced it in. So this might be a case of a short-term bounce. Doesn't mean we're out of the bearish momentum that we're in. I can't outright say bear cycle, but it's like call a spade a spade. Right now, we're in a bear cycle territory, no doubt about it. But Wednesday, it goes one of two ways. It goes deep down, it goes positive up. And I'm not saying we're going to see like Bitcoin run up to 50 grand, but we might see relief on the Bitcoin price up to the sort of upper ends of the 30s. Across the, say, 48 hours, we might see it run up to the 37, 38, 39 territory, which would be positive. Of course it would be positive. The big concern, obviously, with regards to Bitcoin right now, we've got a pretty firm head and shoulders. The neckline is knocking about the 41k level. So we've got to accept the reality here. There's our neckline. Where's our neckline? About there. Yeah, about there. So there's the neckline of our head and shoulders. So the real query, guys, is what happens next? What happens next in the short term? Because again, oh my God, I suck at drawing, ladies and gentlemen. I suck at drawing. I need a mouse, not a touchscreen. But my point was going to be anyway. Everything I'm talking about today is short term. Long term, we know the trend. You can see the bloody trend for Bitcoin. It's quite clear, and crypto in general. This trend is clear. But in the short term, what happens now? The neckline is a problem. for me. I think we're going to have quite significant levels of resistance that if this cannot be broken, Bitcoin is going to certainly face a downturn. If Bitcoin reaches back to this 40 to 41 level in the short term over the next couple of weeks, and it cannot break through that 40 sort of 1K level resistance, we are going to see a larger downturn on Bitcoin and that, of course, the overall crypto markets. And that would probably be the big indicator for me of an impending bear cycle. If, however, it breaks through 41 and then it can break through 44, because 44, we've got key resistance around 44 as well. If we can break through 44 and hold, then we're in a reversal situation. But right now, we're certainly in a downturn. But this meeting, I can't really overemphasize the importance of this meeting. And everyone has a different perspective on this in terms of what the Fed are going to do. Like, what's the point? I mean, it's a serious question, and it's something that's asked in this article. What's the point in the Fed continuing to buy until mid-March? Doesn't make sense. If they're mindful of the balance sheet being $9 trillion, why carry on the quantitative easing till mid-March? Why not just stop it in its tracks? Or, given the situation in terms of employment actually worsening in America, particularly over January and February, you're then talking about interest rate hikes off the back of a huge drop in employment. That has an enormous impact on so many individuals. So it's an intriguing one. Logically, you go off of the basis that the Fed generally don't do what they say. They've generally enjoyed printing out the money. So continuation of that is probably likely, but you can't know. We cannot know. And this meeting on Wednesday is going to have repercussions across every financial market in the world. So, sort of, it's going to be a really interesting day, because we start seeing the S&P 500 dropping, and if we start seeing these big markets dropping, there's a strong signal there that we're going to be in a deep dive in crypto, because crypto will get hit hard, no doubt about it. Crypto will also see a more positive upswing if they continue with quantitative easing. They delay the potential interest rate hikes. But there is fundamentally a massive catalyst moment here. And that's what you got to accept. Whether we go bearish, whether we go bullish, it's going to be a massive catalyst moment for the markets globally. So it's really Wednesday's a really interesting day, and there's no rhyme or reason to how the Fed behave, except to screw the individual. So maybe they are going to just carry on with the way they are, and screw everyone by going, you know what, we're stopping everything all at once. We don't know. It's going to be very interesting. These catalyst moments are important as well. It's an important, if you're in these markets and you're going to be in these markets for a while, you're going to be, whether it's S&P, whether it's FTSE, whether it's whatever it is, right? Crypto. Monitoring these kind of moments is worthwhile. Right, writing down dates, what happened, and then what happened to the markets is worthwhile. These kind of events are worth remembering, because they'll happen again. What happens on Wednesday is not going to be a unique event. You'll see it again in your lifetime. And if you've got a record of what happened, what impacts the meeting had, then you have an understanding of what will happen next time, because it will replicate to some degree. Maybe lesser percentages and all that. You can't. They're not going to exactly match up, but the overall impact that these kind of moments have on a market is worth monitoring, because they will happen again. Even if it's a case of, you see a central bank in the central bank in Australia or a central bank in Asia that are having a similar meeting. If you know that when this meeting occurs, if it's, they decide, yes, we're going to taper off, we're going to raise interest rates, everything tanks, then the same principle will also apply to stocks, etc., in a specific country, a specific territory. These kind of moments are worth remembering. They're worth focusing on and remembering, because they're not unique events. They'll happen again. And we will see how it plays out. But like I said, the one thing that's positive is that their meeting earlier in last year was priced in. It was priced into the market. The market actually did a lot better the day of the meeting and the day after than any of us really expected, because it was already priced in. So the same principle could apply here, but we don't know, because we don't know how their announcement is good or what the announcement is going to be off the back of the meeting. So we'll see. Either way, it's going to be very, very interesting. Yeah, that's it for me. What do you guys think? Actually, tell me. Let me know in the comments. What do you think is going to happen in terms of the outcome of the meeting? So, do you think that the Fed are going to speed up the hike in interest rates, or do you think they're going to speed up the tapering off of quantitative easing? Do you think they're going to delay it because of the employment issues? Or do you think that nothing's going to change and they're going to continue with their thought process of mid-March? Let me know in the comments. I'd be fascinated to hear what you guys think. That's it for me. Hope you're all keeping really well. Hope you're not getting stressed at the charts too much. But remember, even a bear cycle is a win, guys. A bear cycle is a win because you've got the opportunity to get in on cryptos you've seen succeed. If you see Avalanche as an example, in 5 months' time is down to $10 or $5. Avalanche you've just seen Avalanche win. It's a good investment. The bear cycle is an opportunity. It's one people should feel positive about. The only way you start losing is if you start selling all your crypto at huge losses. If you're at a huge loss, but you've got a solid project, if you put all your money into Ethereum at $4,500, guess what? You're not in a bad position. Yeah, Ethereum's worth less, and then it won't be, because it's a market cycle. We have a market cycle, and Ethereum's a top tier project. So that's simple. Yeah. Anyway, if you're new to crypto, come check out Copy My Crypto. Or even if you've been here a while, come check out Copy My Crypto. It's where I talk to you guys about share my portfolio, talking about the markets a lot at the moment, as you can imagine. And 2021 was an awesome year. The long-term investments did phenomenally well. The quick flips did awesome. The airdrops were brilliant. If you want to be a part of that and match the gains that are going to come either this year or in the next bull cycle, we'll see. Then check it out. Links in the description.